Welcome to Seeking Alpha's Wall Street Lunch, our afternoon update on today's market action, news, and analysis. Good afternoon. Today is Tuesday, November 12th, and I'm your host, Kim Kahn. Our top story so far. Retail sales had a strong month in October as the economy remained in good shape and consumers moved past concerns about a port strike. That's according to the CNBC NRF Retail Monitor released by the National Retail Federation. There's been some speculation from analysts that consumers would hold back during the month due to economic and election concerns. NRF CEO Matthew Shea said healthy spending resumed in October as consumers continue to benefit from this year's job gains and higher wages. Inflation is mostly limited to services at this point, and prices for some retail goods are actually falling. October sales have set the stage for a good start to the holiday shopping season. Total retail sales, excluding automobiles and gasoline, were up 0.74% seasonally adjusted month over month. They were up 4.13% year over year. That compared with a decrease of 0.32% month over month and an increase of 0.55% year over year in September, when shoppers showed caution due to geopolitical tensions, a strike at East and Gulf Coast ports, and the end of student loan relief programs. Core retail sales, excluding restaurants in addition to automobile dealers and gasoline stations, were up 0.83% on a month-over-month comparison and up 4.59% year-over-year. The official retail sales figures are due Friday, with economists predicting a 0.3% rise in the headline number and a 0.2% rise in core retail sales. Looking to a retail landscape with tariffs, Pantheon macroeconomist Samuel Toombs says the best hope for households is that retailers absorb a chunk of the rise in import prices. PPI data show that retailers' gross margins remain bloated after they surged between mid-2021 and mid-2022. The evidence from the late 2010s is mixed, with some studies showing retailers reduced margins, but others demonstrating complete pass-through to consumer prices, he said. We're assuming, therefore, that retailers absorb about 20% of the resulting rise in import prices. In today's trading, stocks are little changed so far, with more action in the bond market as traders catch up after the Veterans Day holiday. Treasury yields are gaining again, with the 10-year back at 4.4%. In commodities, gold is under pressure again, but off the lows of the session as it tries to arrest the recent decline. In the previous session, front-month gold futures saw their biggest daily decline since June 2021, extending last week's sharp drop as the U.S. dollar index continues to rise. TD Securities strategist Daniel Gali says gold is also struggling on concerns that the Fed could delay its easing cycle. Among active stocks today, Shopify is rallying. The company said revenue rose 26% year over year in Q3 to $2.16 billion. It was the sixth consecutive quarter of greater than 25% revenue growth, excluding logistics. Looking ahead, Shopify sees Q4 revenue growth at mid to high 20s percentage rate on a year-over-year basis, which is a higher rate than the implied guidance. Gross profit dollars are expected to grow at a year-over-year rate similar to Q3. Home Depot reported revenue rose 6.6% year-over-year to $40.2 billion in Q3. Comparable sales in the U.S. decreased 1.2% for the quarter that ended on October 27th to beat the consensus expectation for a drop of 3.3%. Looking ahead, Home Depot expects total sales to increase about 4% for the year and comparable sales to be down 2.5%, which was an improvement from its prior outlook of down 3 to 4%. It expects to add around 12 new stores. NVIDIA was initiated with a buy rating and a $178 price target at Redburn. Analysts cited the continued prevalence of artificial intelligence spending. And Sea Limited is rallying sharply despite mixed results. SA analyst Multiplo Invest noted that the company reported a 12.8% quarter-on-quarter and 30% year-on-year revenue expansion to $4.3 billion, adding that there were advances in all segments, with emphasis on Shopee and Sea Money, with the expansion of financial services in Brazil and Asia. The results corroborate the thesis that the company is firmly on the path to profitable growth, they said. In other news of note, Honeywell rose after activist investor Elliott Investment Management accumulated a more than $5 billion stake, looking for management to consider a breakup. Elliott said in a letter it wants Honeywell to separate its aerospace and automation businesses into two separate companies. It says a separation of aerospace and automation would result in a share price gain of 51 to 75% over the next 2 years. Elliott's Mark Steinberg and Jesse Cohn wrote that while Honeywell's performance has lagged, its market positioning remains sound and comparable valuations continue to reach new highs. Honeywell didn't immediately respond to Seeking Alpha and our request for comment. And in the Wall Street Research Corner, Eric Johnston, Senior Managing Director at Cantor Fitzgerald, highlights a metric that shows that the Magnificent Seven stocks might not be the unstoppable fighting force they have been. The earnings growth rate forecast for the stocks, Apple, Microsoft, Alphabet, Amazon, Nvidia, Meta Platforms, and Tesla, are getting closer to that of the broader market. The projected growth rate for the group for 2025 has been falling and is now very close to reaching the 14% expected for the overall S&P 500. Check out our story in Seeking Alpha for a great chart on the souring profit views of the group. I'll put the link at the top of show notes. That's all for today's Wall Street Lunch. Look for links for stories in the show notes section. Don't forget, these episodes will be up with transcriptions at seekingalpha.com/WSB and join the elite community of real investors to unearth great investing ideas. Just head to seekingalpha.com/subscriptions.